volume. If there's no volume at this time, then there's going to be volume at this time. If there's no volume at this time, then there's going to be volume at this time. So volume in the market comes from different time blocks. So these are time blocks, right? You have one time block right here, pre-London. You have another time block here at London, pre-New York, New York and London close. So these are time blocks you have. So when you're looking at the chart that we were just looking at, let's just go forward here really quick. And let's go to the chart we were looking at. Right. So now when you're looking at this chart, you're looking to see that, okay, we have this consolidation, and this consolidation is happening in this time block. You had 10:30 p.m. consolidation, 12 consolidation, pre-London 1:30 consolidation. So you're like, okay, if we're consolidating at this time, then when is the next time of volume? That's going to be at London Open. So you're like, okay, let's just wait. So you wait for the next candle, and the candle prints bullish, right? Candle prints bullish. Now, even though this price is ranging, right? Even though price is ranging right now, if we just look at this, what's the probability of the next candle going bullish? Right? We're moving into London Open. We're moving into time where there's a lot of volume. What's the probability of the next candle going bullish? Oh, looks like no one knows here. Oh, no answers. Are we hesitating? Come on, man. God damn. It's only what time? It's 9:30 a.m. and everyone's just quiet as if they're sleeping. Man, YouTube chat is much more active than you. Yeah, right? Like it's a higher probability that's going to go up. So let's say, hypothetically speaking, that you do take a trade. You take a trade, you take a buy, you put your stop loss down over here. You're like, okay, the next candle is going to continue up and we're going to have a good day, right? But when the next candle starts, it does something like this. It stops you out and you're like, oh man, okay, it stopped me out. It stopped me out. Now what I'm going to do? So now one thing to note is that this candle closed a doji candle. So when this new candle starts, now you're looking at the fact that, okay, now since this candle is starting and I got stopped out at this candle, right? Maybe I can enter once this new candle starts to break the high of this doji candle, right? And once it starts to break the high of this doji candle, I can probably take an aggressive impulse entry and have a stop loss below the current candle that is forming. Right? This will be the second entry that you're going to take. So the first entry again is going to be on. Let me just move this here. So first of all, you're going to start to enter. Maybe you're going to say, okay, you know what? This candle is forming bullish. We're coming down from a support, and if we want price to go up, we want price to make a high, make a higher low, make a higher high, higher low, and a higher high. But and you take an entry. Your stop is down over here. This candle forms. It stops you out. You're like, oh man, stop me out. Okay. If it stopped me out, it doesn't mean price is going to go down. I mean, price can go down, but now you're going to look for more confirmations for price to go up. So now when this new candle starts and it starts to break the high of the previous candle, then you start taking this information that, okay, if my bias was still bullish, and if I'm anticipating the candle to continue going bullish, and it's breaking the high of the previous candle, what's the probability that it's going to continue going to create a new high or a high high? If it's going to continue going to make a high high, then it should respect the low it created right over here. Then the candle should have no business coming back down to retest the low if it's breaking the high right over here. Make sense? This will require a lot of practice, like if this makes sense to you guys right now, when this is in a live environment, this will require a lot of practice. So don't think it's easy. This is an advanced concept. If you're new to trading, this will be not easily digestible, because this is an advanced concept. You need to understand how candles form and how candles, how lower time frame candles, they form the overall higher time frame. What about a pending above the high of that range? Yes, that's a very good question. You can use a pending as well. Some guys are here talking about buy stops. You can use that as well, buy stops. That's the whole idea. That's